good to be with you today. My name is Ben Sutton. I'm glad you're joining us for today's webinar, which we are going to be discussing benefits of owning a tax benefits of owning a small business today. As I mentioned, I'm Ben, and I'm one of the accountants and one of the founders here at Mazuma, where we strive to take the bookkeeping and tax burden off of your shoulders and make it as simple and affordable as possible. This webinar will be recorded, just so you're aware. So if you miss anything, or if we answer a question and you're not able to remember what the answer was, you can go back to it. It'll be posted on our YouTube channel. So if you like this content, then go there, subscribe to the channel, give us a like. That's great to help us know what kind of content we should be producing in the future. If you need more information after the webinar is done, of course, our website is always open at mazumausa.com, and you can get more details about our service, or maybe some information off of our blog there. And of course, Mazuma clients have their dashboard they can log into, get answers from their bookkeepers or from our tax professionals about any questions that they have. Following the webinar, we'll have a short Q&A session. So if you have any questions that are related to our topic today, click the Q&A button at the bottom of the window and type your question in there. We'll be happy to answer as many questions as we have time for. All right, let's get started. So we all know that owning a small business comes with some additional responsibilities and concerns as it relates to taxes and accounting and the IRS, right? Now, there are some good sides, right? There's some perks to owning a small business. And some of those are what we'd like to cover today. So first, we're going to start by talking about deductions and what those are, and give you some examples of deductions and what a deduction can save you. Because really, the perks of owning a small business, it's about saving money. It's about lowering your tax bill, enjoying some benefits that come along with the business. All right, so deductions, just so some of you small new business owners out there are aware, same thing as a write-off or an expense. Deduction, write-off, expense, all means the same thing. All is a way of lowering your taxes. All right, we have the income that you earn from the business, then we reduce that income by the deductions to get down to the net profit of your business, and that's what you're taxed on ultimately. So we want to capture as many deductions as possible to lower that net profit, pay as little taxes as possible at the end of the day. So what is a deduction really? As far as the IRS is concerned, they say a deduction is available to you if you pay for something that is ordinary and necessary in your business. Okay, ordinary meaning an expense that is common or accepted in your trade or industry, right? So if you are a photographer, then what are some common things that other photographers are probably paying for you? What's ordinary for a photographer to pay for to run their business? Well, camera, we got travel, maybe we're driving our car, we've got props, we may have hair and makeup expenses for the people we're taking pictures of. Anything that other photographers are paying for, you can pay for and get a deduction. All right. What about necessary? How do we meet the necessary requirement? An expense is necessary if it's something that is helpful and appropriate for your business. So anything that you pay for, any cost that you incur in order to further your business interest is necessary, all right? Like a cell phone or internet or business cards or software that you might use, or advertising that you might use to promote your business. All of those things are necessary to keep the business going, or to keep the business interest furthering down the road and growing your business. So those two terms are what we used to determine whether or not a deduction is available for what you paid for. And now what I just described is very, very broad, right? Ordinary and necessary. Sorry, I'm getting a little feedback on the sound. Is that better?
Move it a little. There you go. Yeah,
Was it rubbing on me?
Your neck.
Okay. Is that better?
There we go.
All right. So think broad when you're thinking, is this a deduction or a write-off or an expense? It's not, there's not this small list of things that are available for you to deduct. And we're going to get into more of that later. Even though I am going to show you a list to give you some ideas, it's not limited to those things. All right, so here is that list. We got vehicles, right? Your car. If you need a car to get around, to do your work, to service your customers, to sell your goods, it's going to be deductible. A phone, cell phone, who can run a business without a cell phone these days? No one. Equipment that might be applicable to your business, tools, cameras, computers, machinery, all that stuff is available for you to deduct. Supplies, contract labor, business meals, all of these things are examples of expenses that you might incur as a business owner and that should be written off to lower your tax bill. We've also got travel, insurance, website, software, professional fees, taxes, marketing and advertising, like I mentioned. So really the list goes on and on, but these are just examples of common things that you would capture as a deduction as a small business owner. All right, so how much is a deduction going to save you if you say you spend $1,000 on advertising? Maybe you're coming up to the end of the year and you want to lower your tax bill, and you say, I'm going to spend some money to lower my taxes. Well, it'd be nice to know how much your taxes are going to be lowered if you spend that money, right? So there's kind of a simple formula that you can use. Basically, you take the amount of money you're going to spend and multiply that by the tax bracket that you're in, or the average tax rate that you're going to be taxed at when you file your tax return. And so, your tax professional who prepares your tax return for you can say exactly what tax bracket you're in and exactly how much a deduction will save you. But here's an example of someone who's in the 25% tax bracket. Okay, so if I spend $1,000 on advertising or on a computer at the end of the year, and I'm in the 25% tax bracket, I can multiply the 1,000 by the 25% and see that that $1,000 expenditure is going to save me $250. All right, so it's like getting a 25% coupon or discount on that computer I purchased, because my tax bill at the end of the year when I file my taxes is going to be $250 lower than it would have been if I just kept that money and put it in my pocket. Okay, which obviously is necessary too. You don't want to spend all your money on business expenses. You want to, you may need to keep some to pay your bills, or of course to live life and maintain the lifestyle you want. But if there's extra and you're looking at whether you should spend it or not before the end of the year to capture those tax savings, then this will help you with that decision, right? Should I spend $1,000 and save $250 in taxes, or should I pocket the $1,000 and pay $250 more? All right. So hopefully that helps you get an idea of what we're talking about as far as savings when it comes to deductions. Okay, so let's start talking about how these deductions can turn into perks or benefits for us as a small business owner. One thing to be aware of is that when you purchase a large asset, like a car, or like one of my dentist clients had to purchase a new x-ray machine before the end of the year. That x-ray machine cost $75,000, right? It's a pretty expensive machine. And some of the cars that we use in our business can be $40,000, $50,000, large purchases, right? Now, I don't have to pay cash for those large purchases in order to take the full deduction. Right now, there's rules in place that I can finance that $75,000 x-ray machine and expense, with bonus depreciation, expense the whole $75,000, even if I'm financing it and paying it off over the next 3 or 5 years. So I get a $75,000 deduction right now this year, even though I'm not paying for that all right now, and I've financed it over a number of years. So that $75,000 deduction, boom, hits my net income and drops my net income by $75,000. I may not even have $75,000 of net income. So what happens in that case? Does it help? And yet the answer is yes, it does. I can show a net loss in my business. Say I've got $50,000 of net income, and then I take the $75,000 x-ray machine deduction. That's going to put me at a net loss of $25,000 in my business, right? That loss can then decrease other sources of income that I've got coming in, like my W-2 income, my spouse's W-2 income, and lower our overall tax bill and increase our tax refund at the end of the year. So these big purchases like that can drive our taxes down so much that, and offset our other income, that we can raise our tax refund, pay a lot less taxes overall. All right. The next one is business meals. Meals, we all have to eat, and people who don't own a business obviously don't get to deduct or write off meals that they're having. We don't get to write off our grocery bill or lunch with anyone if we don't have a business. But if we've got a small business, then if we're going out to lunch with a customer or a vendor or an advisor or friend, and we're talking business, and there's some form of business purpose to this meeting, which honestly, frankly, can be built into almost any meeting. If we're legitimately talking about business and I have an interest in talking to this person about business, I can write that off then by swiping the business card, taking a deduction on my business tax return for that meal. And like I said, if you don't have a business, that's just not possible. But as a business owner, you can. The requirement is that it's got, like I said, there's got to be some business purpose to this meal. And this year it's even better. In 2021, it just got better because one of the last minute changes that they made to the tax code is that in 2021, 100% of business meals are deductible. Previous to that, it used to be 50% business meals are deductible. So we'd have to slash the cost of the meal in half in order to deduct it on the tax return. But now in 2021, 100% of that business meal is deductible. And so that's also a great benefit to be aware of. Don't be shy about swiping that business card anytime you're going out and talking business with somebody. Next perk category we've got here is the business travel. This is one where I really need to refer you back to a previous webinar that we did last summer called How Do I Write Off My Vacation as a Business Expense, because it gives you some details about exactly what hoops you need to jump through in order to deduct business travel, even if there might be some personal vacation time involved. All right, but some of my clients strategize around this really well and are able to deduct their travel. For example, I've got an insurance agent client that goes to Kansas and visits his son and their family there in Kansas. Their son and a couple of his son's friends happen to be clients of this insurance agent. So every time my insurance agent goes and visits his son, he sets up appointments with those his other clients that he has that live around his son. He spends time with them. He meets with them about their insurance and any coverage they have or any coverage needs they might have. And as long as he spends that time with them, then those are business days. He's had a meeting on those days, a business day. And so again, referring you back to that other webinar to get the details, he can write off that whole trip, all of his travel, whether he drives or flies, whether he stays in a hotel or stays with his son. Any expenses that he's incurring associated with the travel can become a deduction for him. All right, and then the last category that I've got listed in this page here is flexibility in retirement contributions. As a small business owner, you can set up 401ks, SEP IRAs. There's some self-employed retirement plans that you can set up for yourself and that are just for your small business. And you can really strategize in using these as a business owner a lot more than you can as an employee. And that's because the amount you can contribute to these plans depends on the amount of profit that you've generated in the business. And so if you are looking at, you're coming up to the end of the year and you're looking at your profits, you can decide at that point how much you want to put in to these retirement plans, as opposed to just being stuck with, what your employer decides to match for you, or how much your employer decides to put in for you. And you're instead of being capped out at the 18,000 mark of what employees are, the cap that employees have in order to contribute to the 401k, you're the employer and the employee in these plans. And so you can decide and be a lot more flexible with how much you put in to these retirement plans. Okay, and so that's if you're generating a profit and you've got significant profits coming out of your business and you're looking at how to drive that tax bill down, go to a financial advisor, consider opening up a SEP or a solo 401k, and that'll open up that benefit to you as a business owner, and definitely not one to be overlooked. All right, so I want to go back to the idea of writing off your vehicle. Okay, I talked about how your car, if you're using it in your business, becomes a deduction. And really, other vehicles, or if you don't have a business, there's no deduction associated with your car. All right, except for maybe the $100 or $200 registration taxes that you're paying every year. But now, as a business owner, you've got some flexibility in how much you use your car for business and how much of that vehicle can be written off. And so, like I said, as a non-business owner, there's practically nothing to deduct when it comes to your car. As a business owner, there is. And so you do not want to miss that deduction. Same idea with the home office. If you don't have a business, nothing in your home, your utilities or your internet or repairs and maintenance that you're doing on your home, nothing is available to you to deduct. As a business owner, a portion of your home, the portion of your home that you're using as an office, is deductible. And so these are additional deductions that you can take as a business owner that allows you to decrease that tax bill that just aren't available for individuals. I'm going to give you a couple examples now of how how this works in the real life. I gave you one already with the insurance agent that travels. I've got a photographer client who really taught me how to really benefit this way. And I'm going to share their example with you. So they are a senior photographer, right? So high school seniors who are graduating, that's their prime client, right? So they like to take senior pictures for all of these young men, young women who are graduating. My client just came up with this idea of taking a group, a select group of her senior clients to Lake Powell every year for an annual retreat where they would go and do photo shoots on the rocks and the water and while they're tubing and all of this stuff. And then they plaster this all over social media. And these kids have a great time out there. And my photographer client attracts more kids to her business because of the possibility of them being selected to go on this trip. Well, in order to pull a trip like that off and to have fun doing it, you got to have a houseboat, right? Of course, you don't go to Lake Powell without, houseboating. And so she decided, okay, well, my houseboat then is going to be a business expense, even though I get I certainly get some personal benefits out of that asset. I can now write off my houseboat. And honestly, I don't know what came first. Like, I think she actually said, I want a houseboat at Lake Powell. How do I turn that into a business expense? And she thought of this creative way of having this retreat with her senior kids and making a business purpose out of that houseboat. And that totally turns it into a qualified expense. Another example that comes up fairly frequently is bloggers. Bloggers are usually blogging from home. They don't have they don't incur many expenses. But something that's really important to some of these bloggers is the way their pictures look when they are displaying food or crafts or things like that on their blog. And I would, so they make a case that it is necessary for them to have a nice new set of cabinets in the background of these pictures, right? And of course, you can see the justified reason why you don't want my old cabinets in the background. They don't look as good. I want my new cabinets to sure make that plate of food look a lot better. And so they buy cabinets and justifiably can write off a portion of those cabinets. Now, of course, they're enjoying, and they and their family are enjoying those cabinets every day, all day. But there's a definite business purpose, which does justify taking some portion of that expense as a deduction in the business. All right, so those are some creative ways that my clients have shown me and how they can take an expense that, like a houseboat, that may not be necessary to further their business interest, but turned it into a necessary expense for their business by integrating that houseboat into their business plan, basically. So I hope that opens up your mind and your awareness to some of the perks and the benefits to owning a small business from a tax perspective, how some of these things can drive your tax bill down that just are not available to people who don't own a business. All right, so that's going to be the end of our topic